Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. I am going to talk about something I've talked about a few times, actually, probably a lot of times. This is one of my favorite, so not like I wouldn't say the absolute favorite, but one of them. Right? I have like a bunch of patterns I like to trade. Uh, this is one of them, and I've talked about this pattern specifically on a few different names. It was Amazon a couple months ago, EA a few months ago, and now I'm going to talk about Netflix. And what the pattern is, it's more specifically around higher beta stocks, right? Names that typically are volatile. This is when I find those are the ones that tend to work better. But it's not exclusively to higher beta, more volatile names. It's basically what I'm looking for is a stock or an ETF that had a long stretch of crazy trading, right? Higher volatility, wider ranging, big moves, right? And then what I'm watching is for long consolidation. So after that long stretch of higher volatility, I'm looking for long consolidation. Now, what that accomplishes is that it kind of sucks the implied volatility out of those options, right? So, like a stock like Netflix, I actually have to go back a couple days. So, I mean, a stock, I mean, you don't really need me to describe Netflix, but what you'll notice is that it was just a huge run for a long time. Finally broke, rolled over, and then it started to get into like kind of like an increasingly tight or tighter, right, consolidation, and it had an ultra aggressive area of resistance around 385 to 390, right? I mean, clear as day, you can see it on the chart. Now, what's interesting about those patterns is that again, a stock that over like the course of its lifetime, or at least over the last 10 years, has been extremely volatile, right, for long periods. And then what happened is like over the last year and a half, it started to lose some of that volatility or lose some of like those really wide ranges. Yes, it has moved, but maybe not so much as it once did, right? So the implied volatility in the option starts to lower, it starts to come down. When it was potentially in like the 100 implied volatility, maybe it starts sinking into like the 70s or the 60s. And while that might still seem high, relatively speaking to what it once was, it's actually lower, right? So what's interesting about these patterns is if you can time the breakout in this case, or breakdown if it's on the downside, then what you're looking at is basically twofold. So you're looking at a break of a multi-year consolidation, right? And also you're looking for an implied volatility surge, right? Because the implied volatility on those contracts after it goes through that long stretch of like lower trading ranges or lower volatility, you're looking for a return to the historical level, right? You're looking for a return to like that higher implied volatility that it had over like the previous couple years, right? So it's basically like a twofold strategy. It's looking for a move higher in the stock. In this case, it was a breakout, right? And a move higher in implied volatility along with it because you want to see return to that higher volatility action, right? And Netflix broke out in addition to just screaming higher over the last couple of days, you're seeing that massive surge in implied volatility, right? Next week, I was looking at next week's options just because I knew they had earnings. Coming into the week, they were pricing in about like anywhere from like say like low 40s, so like 40 to 45, right? Over the course of this week, those like a same straddle has now moved up to about mid 50s, like 55 to 56. So in addition to the stock going sharply higher, now the implied volatility on those options has shot up too, right? The implied move on that stock has shot up along with it. So it's like a twofold thing. That's why I'm really like screening for these types of setups. It's because it's not only a technical move and like either a move higher in the stock or a move lower in the stock, but it's also a technical. It's also a move in implied volatility. So if you see like implied volatility go from 80 to 100, that's significant, and that could be substantial for your position, right? So I really love these patterns. They don't, you have to do a little bit more digging, a little bit more research to find them. But these are the ones that I'm always on the lookout for because of that potential, right? It's like the breakout and the implied volatility surge. It's like a two-fold strategy if you can really find it and time it well. All right. So if you like these videos and you're looking for more information on option trade ideas or earnings trade ideas or options education, please follow up with the link in the description of the video for more information on options at play. I hope you have a safe night, have a healthy night, and I will talk to you all tomorrow.